Hey everyone, and welcome back to the GMS Weekly Podcast, your weekly snapshot of the world's ship recycling markets. I'm Ingrid.
And I'm Henning. This week's headline says it all. Certainly uncertain. Markets are restless, rates are rising, and recyclers are, well, mostly resting.
Let's start with the global picture. The Baltic Dry Index climbed just over 1% this week, with Capes, Panamaxes, and dry indices all showing gains. Trading markets are firming, even as recycling keeps sinking lower.
Oil, on the other hand, continued to slide, closing around $57 a barrel. That's an 8% drop in a month and 18% down from last year. So ship owners are pocketing savings while recyclers watch prices drift back toward the high 300s per ton.
And with tonnage supply still tight after COVID, the demolition side remains the empty pool end of the market. Even though more ships have turned up at anchorages lately, bids across the subcontinent are softening again.
Bangladesh started the week with some optimism but ended in another timeout. Steel prices held steady at $519 per ton, the only market not to fall. But the taka weakened to around $122 against the dollar, squeezing local recyclers.
No new arrivals in Chattogram either, and inventories keep piling up. After a brief flurry of buying, most yards have gone quiet again, waiting for political clarity and, hopefully, a new government to pull the economy out of inflation station.
In India, reality's kicking in hard. Steel plate prices dropped another $5 to about $389 per ton, and the rupee hovered near 88 to the dollar. Sentiment remains stuck near record lows.
Anchorage activity looks busy, more than 120,000 LDT across 11 ships, but most of that was previously committed. Local buyers have mostly stepped back, especially for dry units now trading well below $400 per LDT.
With Diwali this week, many recyclers are taking the holiday pause as a blessing in disguise.
Pakistan keeps running just to stay in place. Inflation nearly doubled in September. The rupee slipped to 283.6, and cheaper Iranian steel imports pushed local plate prices down another $5 to $614 per ton.
A few vessels did arrive, and including a 22,000-ton tanker and a 9,000-ton bulker, but that momentum could fade fast. The bigger concern is HKC compliance. Not a single yard has been approved yet, and that's making both ship owners and cash buyers nervous about future deliveries.
And finally, Turkey's market remains a surreal ride. The lira is clinging just under 42 to the dollar. Steel is shaky, and yet local offers are somehow holding at previous levels.
It's been 2 years of slippage for Aliaga, and 2025 hasn't offered much relief heading into the new year.
So, to sum it up, freight's firm, oil's cheap, and recyclers across the board are short on both tonnage and optimism.
The subcontinent stays cautious as 2025 winds down, hoping for steadier ground once HKC rules and global trade routes finally settle.
That's it for this week. You can read the full GMS Weekly, Week 42, Certainly Uncertain, on the GMS mobile app. And don't forget to catch this and all past episodes on Spotify, Apple Podcasts, Amazon Music, and YouTube. Thanks for tuning in. See you next week.